All right, guys, what's going on? I want to do a quick update. Take a look at Bitcoin, take a look at ETH, take a look at alts, just some thoughts on the market. And we're back in action on YouTube again. Have my team back, hopefully making them extra special. Before we get started, as a reminder, none of this is financial advice, strictly for entertainment purposes only. One thing that I do want to touch on, there is a new link below. I know you guys are always looking for exchanges to trade alts, not just spot, but futures. And Blowfin is a newer exchange. I probably wouldn't have noticed this if it wasn't for the fact that In Silico Terminal has integrated with them. So that's sort of a nod of approval. I've checked out the exchange myself. Seems like a good exchange. But more importantly, for those of you that ask about trading futures and still having that non-KYC option, I know a lot of people don't like to give away their personal information to exchanges. We've seen what's happened before, but the opportunity is there for you guys to get a bonus. If you guys did trade on the exchange, make sure that you get that bonus. If not, feel free to message me. You guys have seen in the past, I've shared the ref links before, most recently sharing Woo and then donating those proceeds to St. Jude. So we'll see if we can get more of that going in the future as everyone is making money and hopefully everyone is happy to give it away. So first things first, Bitcoin. I've kind of gone over the market at large and what my opinion is and where we're at. I don't think we're looking at a 100K break in the near future. If we look at what essentially the 100K level looked like, this is a major psychological level, right? This is an area that had a lot of psychological importance. You see a lot of activity around these large holes, round numbers, and 100K was probably the biggest psychological level that we've dealt with in Bitcoin's history, right? The last thing I could think of was 2010 breaking 10,000, and the wall was really stacked then. When it broke, we had a couple weeks of up only, but then we put in the 2017, 2018 top. So it was stacked this time around. This was the most stacked it's ever been. So the order book skew in terms of just looking at the depth in the ask or in the offer compared to the bids, it just absolutely dwarfed the limit order book on the bid side. So there is a lot of stickiness above. There are a lot of people that are selling. There are position traders that have placed incredible trades on just the all-time high break. You guys know that I said for a long time, when the all-time high breaks, you'll have time to enter in it. Don't psych yourself out. You had 4 or 5 days to get involved. And that was what, like a 35% plus move. So you have people that put 8, 9, 10 figures behind that. You could put size behind BTC and that's a significant return. So they're not just going to YOLO it. So you have large position traders. You have early Bitcoin holders that are getting rid of some of their supply, taking profit. Yes, they do take profit. And then you have miners as well. And also, again, you just have the fact that it is a big number. It's the number we all look forward to. There hasn't been a really big pullback since the all-time high break. It was heavily defended. When we got up to that level, it stayed there. It was sticky. And then even Sailor's firepower wasn't able to do anything. You guys saw me share that there was a Coinbase premium blowout. A lot of people looking at the Coinbase premium as a sign of strength. That's more so whenever it's sort of static and remains consistent. It might be trading at 50 points, 100 points, a few basis points above consistently. But when it really changes in a short amount of time, in this case, it blew out from like 12 basis points or 15 basis points and blew out to 30. When it does that, it's often that you see that at the end of exhaustive moves, and it's doing that, and there's arb between the exchanges because essentially Binance is keeping a lid on things. So you had Sailor buying on Coinbase, Coinbase less liquid than Binance, Binance completely stacked, Binance not going anywhere, and Coinbase continuing upward. More often than not, these are marking highs rather than people looking at these the way they do and assuming that, okay, Coinbase premium has been persistent, so if it's increasing, we must be getting stronger, when in reality, it's not. You see these at short-term highs, temporary tops, and then I ended up selling a good amount of futures around 99K. So I think my average price out was 99K, and that was hedging off some of my spot exposure that's off exchange. That turned out to be a really good trade. I went over those in the SyncQuote spaces. So a lot of things that just added up. And again, people were talking about the 100K level and how it's sort of the Hundy roll level, Livermore and Century Mark. If you guys are not familiar with this concept, it's a pretty common phenomenon in markets. It's not even just at $100, but that's, where it's derived from. Basically, when price breaks a level like $100, it's in a stock, it's in a crypto. It's not the case that you see it stop at 100. It's often going to overthrow 102, 103, 104, 105. So the thing is, when you get to these big round, big whole numbers, they don't tend to just put a cap on it at that level to the dollar. You typically see that stops are taken out, the market blows through those levels. It's a level that gets people excited. Again, this is behavioral stuff rather than just technicals. And there's a big behavioral component, obviously, in trading. If not one of the biggest components of trading is human behavior, right? The people clicking the buy and the sell buttons, right? Programming the algos and all of that. So that's important when you're actually breaking 100. People talking about that when we were not breaking 100 yet was just kind of a sign that people were taking the level for granted. So I do think we're going to break 100, but I think obviously this pullback is healthy. A couple things that are worth pointing out in the last 24 to 48 hours, we started to see futures overheat. We started to see more dip buying in the perp market. And this is something that you often see not get rewarded. It's often the case that after you have really extended moves, you look to liquidate as much of that positioning as possible. Often that positioning is late. Often because it's late, it's sensitive. And you're going to see, the market put in a big pullback after things have gotten hot on the derivative side of things and the spot market is no longer keeping up. So we know we have a big spot buyer who's supportive of prices. We're looking at a level that is not budging and there's a good amount of profit taking around this level. So I do think it'll take some time. What I will say is that if you look at this structure on the daily, there's levels that I really like. One, I don't really like this kind of structure. So if you look at this structure on 30-minute chart, basically looking at a series of uninterrupted marginally higher lows. So this is like a trailing stop person's dream. It's often the case that when the market starts trading back into this kind of level that you'll see that it'll cascade much lower because, again, it's an area where liquidity is built up, and liquidity meaning in the form of sell orders that will be triggered at market to get people out of position, where stops are dragged up, et cetera, et cetera. So it's kind of like a domino situation. When you hit one, you start cascading into the rest. We managed to trade into a few of those and price has remained supported. There's very few times where this happens. The times that it happens, it almost seems like people are anticipating the breakdown. You get a bunch of shorts built up at the low, you get a large increase in open interest. If anything, what we've done with this move down in BTC is we've kind of flattened out to the new threshold in open interest, or I'd say like the new range we're developing. So we traded in a range of open interest leading up to this all-time high break or this most recent move, well, both of them actually. And now you could see we're sort of ping-ponging between here. It doesn't look like locally there's a ton of leverage built up. Right, we've at least washed out any top buyers, but I think you could still see that there is cascade risk if we do push into that 90K region again. The same way on the way down as it is on the way up, that whole number like that, 90K, I think there's a good amount of stops that are probably isolated around that area. So ideally, best case scenario, I think, is trading back into something like this gap down here. That brief gap that we had from 82 up to the high of 88, pretty uninterrupted move up, pretty one-sided. Market moved very fast through there. It's not like a gap. I think there might be a couple singles down there, but it's often the case that you'll see the market trade back to a level like that. Good place to get involved if it does. So let's say 85. And then you have confluence between that level and the monthly VWAP. And the monthly VWAP in this case, I think, is a really good level because it's actually the anchored VWAP. It's essentially the anchored VWAP from the all-time high break. So a lot of times I'll use anchored VWAPs over everything. And it's usually going to be after there's some kind of either episodic pivot, major change in market structure, context shift, news catalyst break, and it's just to look at where the positioning has accumulated post that event, sort of an average level. So, buyers are definitely sitting in good position. I do think that as you trade back down, or if we do, the first touch of that level is almost always guaranteed a really good opportunity to get involved, especially after extended moves like this. You'll see a good amount of positioning cover, you see shorts cover, you see longs get involved. So yeah, I think that sort of anchored VWAP, which happens to be this monthly VWAP. And again, it just works perfectly from the origin of that move. 85, 86, if we continue down, that seems like a great area to get involved. And if we got down there in a cascade, a flush, large amount of liquidations, even better, right? When you force a good amount of people out of the market. That's what I'm looking at to the downside. I mean, it's not getting that slippery right now. So if you do spot a shift in lower time frame market structure, and I want to start using market structure properly. People talk about market structure all the time when it comes to actual candle structure. Market structure is a lot more. It's like the people you're trading against, the order book structure, the exchange structure, time of day type of things. It's way more than just a chart. But from a chart standpoint, from a price action standpoint, if we start to see this rebid, we've had a good amount of selling into these lows. If you open up an exo charts, these things are hammered this morning. They're hammered again. If we start rebidding levels, when you start losing prior daily opens, when you've had multiple green days, you'll see that prior daily open or the last daily open is a good level to look for a retest and reoffer. So for example, at this high right here, the last daily that was green before the high was put in, that is the opening of that day. So you begin to shift to the downside. I look at that level to get retested. There was also an inside day there too. So you had an inside day retest, open retest after that structure broke. But the same thing, in my opinion, works to the downside, right? We're starting to balance out down here. The POC happens to be right around here as well. If you're looking at a volume profile, put on the TPO chart, the volume profile and the POC are basically at the same level. But if we start to see that we're retrading back above prior day's close, if we start trading back above 93 and we start to look constructive above there, I would assume that this can go higher and then can still go lower, right? But we're just kind of in an area where I don't expect things to be that quick in any direction. So if anything, be prepared for chop here. What I would say is if we do, let's say we start trading back above 93, or retaking 93, retest prior day's highs, I think 96, 95 makes sense as an area to look for some kind of battle by sellers to step back in. I don't know if they're going to walk this down if their price isn't trading back up to those offers. Sometimes you see that when limits aren't getting filled, they're just turned into market orders, right? Start clearing out that selling early. But anyway, the 96 level to me makes sense for the bigger flip. So if we start flipping 93, I would ultimately look to 96. But if we trade back above 96, so if we start seeing strength above 96, I think this slingshots to all-time highs. The same way to the downside, even though the downside is different because you have marginally higher lows. Here, you haven't really had any kind of significant run. There hasn't been a major rejection. It's been just kind of a gradual, pretty friendly roll. So on the way back up, if we start trading back within that composite, I think you could slingshot back to all-time highs. And I do think now, especially with the roll, right? So we've had a little bit of a rollover. You have people that are probably building up hedges. You probably have hedges that have accumulated up here. Again, as the market had moved up, there's periods where funding had started coming down. Spot market started picking up, but those sellers are in good position still. So I think we have built a good amount of sellers up here. So I do think now that we've had this run lower, if we trade higher, there is definitely a stronger case for a stop run through that high. So maybe they're engineering this, right? Someone might say that. But either way, if we're trading back up towards 96 and we don't see a clear rejection there, we're trading back within this range, I think you're going to run through 100K pretty quickly. But I would be mindful of what kind of takes place on the other side of that. I think 100K sets you up a few percent up, 102, 103. I wouldn't get too crazy after we've seen what's happened at that level the first time around. Again, you do have to deal with, across Coinbase and across Binance, a pretty sticky order book. And in crypto, they are actually happy to leave this there and get filled. And it's not to trick you. It's not to spoof. It's literally, hey, I'm going to leave this on the book and I've been first in the queue for a while, so that's how I'm going to exit. So until we do away with that, I would assume it's going to be strong. Again, this has been a really strong trend so far, so I don't think anyone should lose hope or get really morose about this response so far. It's actually been a pretty constructive move down. I would keep an eye on Microstrategy intraday today after the New York Open. So after the NYSE Open, these two charts were very correlated. So if you just throw on BTC overlay, you could see that when Microstrategy started to get slippery, Microstrategy was actually leading BTC. It started approaching gaps and looking like maybe it was going to cascade. This does look like, a pretty ugly topping pattern, at least for the foreseeable future. The thing about MicroStrategy, which I've gone over, is the truth doesn't really actually matter that much. So Sailor's not going to get liquidated. Bitcoin can trade down to 40K. It wouldn't matter. That can happen overnight. It wouldn't matter. But the perception is that would matter. So it's retail that panics. And I would just consider that if MicroStrategy continues lower, it doesn't matter if he doesn't have to liquidate. People are going to liquidate because they think he does. So, you'll never know what kind of lower prices you'll get based on sort of that knee-jerk response to something that is actually not that important, at least in the short term. So the next thing I want to talk about is ETH. So ETH has noticeably a little bit more strength recently than it has had in a long time. So you can look at ETH BTC chart. I just look at the USD chart. ETH market structure from a price action standpoint, making higher highs and potentially higher lows right here, keeping it very simple. Guarding prior day's lows. We haven't traded back down to this gap of singles right around 3225, 3200, but things actually look good with ETH. Keep in mind, prior cycles, when Bitcoin has actually topped, everyone thinks that it lasts much longer, but ETH goes on a run for a couple weeks, and that's really it. So we could be seeing this, but the thing that I think is worth pointing out is if we look at BTC, so over the last week on the CME, so BTC open interest, annualized basis coming off slightly over the last couple of days, ETH is up and up. So it's possible that we're seeing TradFi shift. It's possible that ETH narrative begins to pick up now. Again, ever since Trump won, everything for crypto has changed. I've said this before. I always thought that eventually the ETH ETF would get looked up as a catch-up to BTC ETF success. So I would just keep an eye on this. If you start to see more ETF flows come in, if you start to see that this continues to get picked up and any pullbacks, we don't get any large pull off of this, I do think there is something to be said for prior cycle behavior to continue to some degree. And from a market structure, again, price action standpoint, it doesn't look that bad, right? You got your bounce off of November's VWAP. So again, that anchored VWAP off that move, put in a higher high locally. Anything that consolidates above this level, I think could build sort of a higher time frame flag for a more sustained move higher. And again, I do think that's going to happen because I don't think Bitcoin has topped. So the chances are that this is probably going to continue to move up. It's just a matter of, is this the right vehicle to express a position for what trade exists in this market right now, which is the crypto trade as a whole has gained a ton of momentum. So I think you obviously have to look at things idiosyncratically, but also consider that you want to have the best possible exposure to sort of that broad trade that's taking place. And for me, that's at least how I think. I don't try to be a picker. I want to look at what betas give me the best risk-adjusted returns. Does it make sense to hold something that's way more volatile than BTC, has more downside, less upside? There's a lot to think about. But if ETH is waking up and we're starting to see more institutional attention, then there could be a massive sea change. So that's ETH. As far as alts go, I think the alt story is kind of always the same. As long as there's stability in BTC and ETH outperformance, that would be the best case scenario. Let's say BTC puts in some kind of constructive bottom here locally. ETH continues to outperform. I think you're going to see a ton of confidence come into alts. You do need more capital to flow into alts at this point. I think that, for example, like there has been a slight rotation that's taken place. So things that have been out of favor that definitely are not saturated. And you've had underperformance by things that clearly have been the most popular pairs, the flavor of the last few quarters of the year, and positive news not helping these anymore. So you have a ton of saturation likely in a lot of the meme coins. You have the Robinhood pump that was completely retraced. I think there's a good case to be made that there might be, again, sort of that rotation back to quality or what gets perceived as quality, not necessarily what actually is quality. So a return to substance, a return to quality, if you will. But I'm just looking at price action. You're seeing some weakness in meme coins. You're seeing things like Say, which always followed suit, but lagged greatly for a bit. You're seeing Tau, you're seeing Tia. So I think it's worth considering that change could be upon us. But again, it still all hinges on BTC. And not only Bitcoin stability, but if you get ETH outperformance, I don't like to talk about things like alt season. I think you just have periods of outperformance. I think people tend to remember things incorrectly either way. I forgot what that phenomenon is called, but it's where you remember the past inaccurately. You add something that just never existed. Anyhow, as long as there's stability in BTC, my view is that we're going to see outperformance in alts. But I think there is a ton of dispersion still. There is a slight rising tide. Dino coins are pumping. I don't know if that's a good thing or a bad thing, but it's often a case that retail is coming in and they have no idea what they're buying. They're buying the things they last bought or adding to what is still in their 10-year-old Coinbase portfolio. But what I would say with alts is weekly breakouts, daily retests. What you're seeing with alts is you are seeing that market structure changes are leading to continuation. But it is something that you have to be patient with. You can't look at a breakout and assume that in the 30 minutes it's been above a level that it's going to go up only from there. I would assume that you have a couple days after a weekly change in market structure, but what you're seeing is continuation off these moves. So I think you still have to bet on that. I mean, say for example, this is a great looking chart now. You started trading back above a prior composite. You can see the clean rejection around this level over time. If we just extend sort of one composite right here, trading back April to June, we had that breakdown, another composite basically from July to October. So there's been a sort of constructive transition back into these lows right here. And now you can see you're testing the top side of that structure, sort of the most bullish outcome, right? The complete overthrow and retest. Again, weekly breakouts, daily retests. In the case of fast moving trends, like with BTC, on the way up, you got to dial in and you got to zoom in to get an entry. With alts, what you're seeing is you are getting a decent amount of time if you're able to weather sort of that 3-4 days of chop. And again, now I understand you have to keep an eye on Bitcoin and that is a risk. But for example, if you're looking at TIA right here, where has the market been pinned now going back into June basically? The market has basically been pinned in this region, and this is the first significant breakout. You've had sort of retested that level already. And here, you guys can see I use boxes. I would use rectangles and not lines. I would use this rectangle tool, have it extend left and right, and just identify the areas of the most interaction. So areas going back to April, just to give you an idea of how I mark off levels and areas where I think people are going to get involved and where there's context shifts and big shifts in the environment. Sort of this 660, 750 zone. It's clear where there's a big change above there. I think from a risk reward standpoint, you can't look at this and say this is a deviation, especially in these conditions. You have to be willing to get behind a retest of this level. Again, now we're talking a couple days behind this. I ended up picking up a good amount of TIA, but these are the situations you're looking at. We're looking at gradual change over a long period of time, finally a big sort of shot over the bow in some of these. And I do think that what happens is you see these changes, you don't get involved early, and then you look back a couple weeks because you're worried about, maybe Bitcoin was going to fall more, and then it's up another 50%. You just have to be willing to take the risk in these conditions. You have to know what conditions are worth taking risk in, and I think we're still in conditions that permit that. And then someone had a question. I mentioned this in the Telegram. I think with alts that have been really outperforming, you still have to expect massive pullbacks. In these conditions, I'm looking for shallower pullbacks versus sort of the historical norm, which is, something retracing 70, 80%. So I'm looking at actually 50% 50% retracements of the local highs. So for example, just using Pepe really quickly, Pepe 50% retracement takes us right back down to sort of that meaty zone we broke from. So there's a lot of confluence down there, but even in the absence of confluence, right? So with Pepe, I think you would first look at this monthly VWAP right here. But even in the absence of confluence, if for all alts, if we're pulling back 50% already, look for a bottom to start to form, look for constructive price action, price getting rebid. When I say rebid, for example, let's say we've been making a series of lower lows. And if we've defined a range, broken down, and then we're rebid, right? The most bullish outcome, trading back above a prior composite, rebidding that level. You could look at CVDs, you could look at order book depth, but seeing that, hey, an area where buyers are really not stepping in, now they're definitely stepping in. If you have this around levels of confluence, 50% pullback, monthly VWAPs, anchor VWAPs, areas of market structure that were pivotal, I think you just have to be willing to take the risk in these conditions. They're only going to last for so long. Really quickly, you can see that people are sort of chomping at the bit to get into alts. When the market sort of comes into agreement that a Bitcoin bottom has been put in, that usually only happens after a major liquidation where you see a ton of confidence, and we haven't had a major liquidation yet. It's been a lot of positioning liquidated, don't get me wrong, almost 500 million or something like that over the last 24 hours maybe. But you could see when Bitcoin dominance is coming down, the initial big drop in Bitcoin dominance we did have on the back of ETH moving up, and also we had others and total 3 moving up as well. So people started to jam into alts, but then Bitcoin continued to trade lower and you saw sort of that panic behavior. People got out of alts again. But I do think there will come a time when, and like I said, I don't think it's going to be too far. We're literally talking about whether it happens locally around 90K or happens closer to 85. But I think once you start to get the signs that a bottom has been put in, so maybe we swipe that, maybe we start to trade back and you're sideways for a period of a couple weeks, I think alts are going to absolutely fly. Yeah, so that's that. I probably left out a bunch of other things that are worth touching on, but I do want to keep this under 30 minutes. And I'm going to get more consistent with these. So until next time, thank you for tuning in. Please leave comments, suggestions, all of that stuff below.